Welcome back. You're still with us on Startup Street. B2B platform Jumbotail, which connects mom and pop stores to suppliers, is in advanced talks to raise $120 million from SC Ventures, Invest and others in a fresh funding round that could value the company at $1 billion. My colleague Aishwarya Anand spoke with Ashish, Jhina, the co-founder of Jumbotail, to know more about the e-commerce platform's plans going forward.
I think we're big believers that small retailers and SMEs are the lifeblood of commerce in India. We will continue to build as we have done over the last 10 years. This is year 10 of the business. We are building for the long term. As and when there are opportunities, as good companies come along the way, we will definitely take a look. We've always done that. If there's culture fit, if there is, if it makes sound business sense, we will definitely look at that. But obviously the core business continues to focus on building a profitable enterprise that actually allows us to advance the mission that we're working towards, and that's something that will continue. Capital raises, acquisitions, etc. are things that any company that's looking to advance its vision with aggression and discipline will continue to look. So we are no different than anybody else on that.
Okay. So talking about profitability, I want to understand that the recent numbers that we have is from FY23, where your revenues doubled to 819 crore. The losses have also increased to 264 crores. So tell me, what does FY24 numbers look like, and what is the part of profitability here?
Actually, the numbers you're talking about, right? Given that we are structured as a marketplace, it's those numbers don't actually tell the full story.
Okay. What is the full story then?
So I think focus, obviously, right? We first 6 years of the business, we were a single city company, focusing on getting the right model.
Correct.
Through the process of COVID, we expanded the reach once we felt we had a model that actually made sense, unit economically, as well as providing value to the retailer. Over the last couple of years, especially over the last year, the big focus has been on substantially improving profitability. Every trip that goes out today, on a daily basis, actually makes money. Every city, from a contribution perspective, makes money. There is still some burn, obviously, but that's actually been the big focus, and we're very, very excited about what's happened over the last year. At the right point in time, we'll talk about numbers, but I think big focus was all new cities that we had opened up over the last 2 years, making sure that they get to the right scale, but also the right unit economics. That's something that we've made a lot of progress on. In fact, every trip that goes out and does delivery, and that's the unit metric that we measure, actually is profitable and covers not just the cost of the trip, but also large amounts of fixed costs. There's obviously still some burn, and that's what you raise capital from time to time. We're very fortunate to be backed by deep pools of capital, and so as far as we're concerned, continue to keep building in that journey, and we're very excited about what the future holds.
So by the end of this year, are there any targets in terms of your ARR, whatever it is that you're planning to hit? Is there any numbers that, if you could shed some light on that? Or maybe like the growth rate, if you can talk about what growth rate do you expect to hit by the end of this year, if you don't talk about the exact numbers?
I think the goal is to continue to raise margins. The goal is to continue to actually make sure that we generate more and more capital per trip, per delivery, in order to cover the fixed costs of running the business. I think we've made a tremendous amount of progress in that over the last year. I think the goal is to continue to keep doing that. And as that trajectory sort of proceeds forward, the numbers will take care of themselves. We don't necessarily set GMV goals or things like that. I think it's very easy to get GMV in the wrong ways in this sector. I think our focus is, it has to add value to retailers. It has to make sure that they are set up for success in the future. It has to help our brand partners, especially smaller regional brands, actually reach these retailers in larger numbers, actually have a level playing field to even some of the largest brands who are also good partners with us. I think as long as we're doing that, the numbers will take care of themselves. And we've had a long history of sort of seeing, when we plan something, sometimes things take a little bit longer, sometimes you get there a little bit faster. But as long as you're executing with integrity, as long as you're focusing on your customer, both retailer and their consumers, as well as the brands, these are the three integral parts of our ecosystem. I think it's a very, very large market that we're going after, and we're very excited about the outcome. I think as leaders in this space today, we feel very confident that the path that we're executing on is the right path. Results will follow in due course. We've already seen significant outcomes on the profitability journey, and when those numbers come out, we'll be happy to sort of have another conversation with you. I think that trajectory is what we're looking to continue.
Okay, so there were plans to expand your J24 store network to 300 outlets. How far are you on those plans? And by when, what's the target that you have to reach those numbers, that by this year we want it to be done? At least give me something on the numbers.
I'll tell you, right? We have about a 70 store network in Bangalore.
Correct.
Right? It is, to me, again, I think in literally everything that we've done in this business, it's easy to increase store numbers, right? But what's most important in this, right? There's about 2 million kirana stores in urban India,
Correct.
right? So there's no shortage of stores that you can actually help entrepreneurs run. So let me be very clear about what J24 does.
Yeah.
J24 is an entrepreneur-run network that allows the entrepreneur to actually transform their store into a modern convenience grocery store.
Okay.
Right? We provide a series of services to these entrepreneurs to actually help them get more traffic, more consumers in. So a typical J24 store actually has about 2.5 times the traffic that a normal kirana store has. So it elevates the standard of living for the retailer. It makes them ready for the modern consumer and their needs, which are obviously changing rapidly.
Correct.
And what we're focused on is making sure that our entrepreneurs are making money, which they are now in increasingly large numbers. We are set up to, obviously we have a B2B network that operates across 10 different urban clusters. It's set up to actually, scale the J24 business. But we first want to make sure that, given that this is entrepreneurs that we're dealing with, we want to make sure that every single entrepreneur that comes in has a great experience. The consumers that are walking into these stores have great experiences. I think that's what we've spent the last couple of years working on. Once you get there, which we believe we are now at, you're now set up to actually scale. Again, we'll no reason to hurry, scaling on any of these parameters. We do it at, a store-by-store basis. But obviously, we have a strong base of 10 urban, agglomerations across the country where, you have about 50, 60 million consumers. So, as we sort of look forward, each of those cities will start, seeing entrepreneurs come in. But there's a certain critical mass that we first want to get to in Bangalore. I think that's the focus for the rest of the year. And then, as those opportunities come up, we'll continue to scale.
All the best with all those plans. We wish to hear exciting announcements very, very soon. And thank you very much for speaking to us.
All right, so Jumbotail could